In this video, I'll take a look at the head and shoulders pattern. The head and shoulders pattern is one that is recognized by most traders. It's very commonly traded, so of course you want to know about it. A head and shoulders and an inverse head and shoulders, because there's two directions that you can trade it, looks something like this in the case of a head and shoulders, and an uptrend. So what happens is you get a continuation of the uptrend. You get the pullback like you get, in any uptrend, and then you continue to go higher. You make a higher high. That's part of an uptrend as well. You pull back a bit, and then this hump over here doesn't make a new high. So this is a shoulder, that's a shoulder, and that's your head, hence the name. You can draw a line from these little dips between the head and shoulders, between each shoulder and the head, I should probably phrase it as. And that's your neckline. And your neckline is a signal to either buy or sell. In this case, sell in a head and shoulders. So think about it. What's happened is we've rallied, we continued, and then this time we just ran out of momentum. The great thing about head and shoulders, it's got a built-in measuring stick here, where the top of the head to the neckline, if you measure that, and let's just say it's $200. Well, a breakdown at the neckline, you're aiming for at least $200. A lot of times the stop gets put on the other side of the shoulder. And quite often that automatically gives you at least a positive risk to reward ratio, sometimes 2, sometimes 3 to 1 automatically. Another thing that you'll notice over time is a lot of times these patterns, especially in currencies for whatever reason, they'll fulfill that move, grind for a bit, and continue going even further. So that's the head and shoulders. The inverse head and shoulders, as I'm sure you have guessed, is simply the bullish version of this. In a downtrend, you'll see something like that. You've got your neckline, you've got the measurement, you got your target. Should be noted, it can be angled like this. It does not have to be straight up and down 90 degrees, so sometimes, they'll actually look more like this, and then you draw your line like that. Same thing with the inverted head and shoulders. So let's take a look at these in the wild, and you can see exactly what I'm looking for here. And there's your neckline. So you can see that the pattern does play out, right? So here is your neckline, and here is the height of the head to neckline. And you'll notice that we clearly hit the target without too many issues. And in fact, hit that area a couple of times. Not a huge surprise because a lot of times these areas get visited more than once. And finally, over here in Tron, this is a 4-hour chart. You can see that we had been rallying. We got a nice rally there, a bigger rally, and then kind of ran out of steam. Let's go ahead and draw our neckline. You can see that you could have put your stop loss here. Your measured move was 6 cents. So from 21, you're looking for a move down to 15. And you did, in fact, get it. Wasn't right away, but it did happen. Never threatened your stop loss. You will find that head and shoulders patterns are followed by quite a few traders, mainly because they're obvious. They catch a lot of people's attention. Higher time frames are much more reliable than shorter time frames, as is the case with all technical analysis patterns. Let's take a look at MACD. And you can see that we had a crossover at an extremely high level right here at the top. And then by the time we got down here, we were well below the zero. So that, of course, would have caught the attention of somebody who was a MACD trader. The 20 EMA and a 4-hour chart, you can see sloped nicely, crashed through it, found resistance, and then broke down. That would have been a signal for somebody using the EMA. There are quite a few different ways to do this, but you'll notice that the pattern The great thing about this pattern is that when you step into it and you get the breakdown, for example, in this case, you knew exactly what you were looking for to begin with. You also had a place to get out because patterns do fail. They're not 100%. But the nice thing about these patterns is so many people pay attention to them that they give you a little higher percentage probability. In the next video, I'll take a look at something called a doji candlestick and the myriad of different types